Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now, if you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now, Motilal Oswal is a brokerage firm from India. Here, we present 10 stocks which are their preferred picks right now. Now, some of these stocks may appear a bit expensive, but we have to see it in the context of the growth that these companies would be undergoing over the next few years. Please watch this video to know more. Now, the first company on the list is Havells India Limited, and it's currently available at 504.25. The price when this stock was recommended by Motilal Oswal was 521. The target price is 640. The symbol for the company is HAVELLS. Now, Havells India Limited is a holding company. The company is engaged in manufacturing switch gears, cable, lighting and fixtures. It also deals in electric consumer durables. The company operates through 4 segments: switch gears, lighting and fixtures, cables and electrical consumer durables. Now, the 1-year chart shows that the company was on an uptrend for the first few months, but after that has largely been consolidating. The market cap of the company is 31,523.11 crores, which means that the company is a large cap one. The EPS is 9.30, translating into a price to earnings ratio of 54.22. Now, this is largely in line with the industry PE of 55.47. The book value is 52.37, which translates into an expensive price to book ratio of 9.63. The dividend yield here is 0.69, whereas the promoter holding here is average and probably on the better side at 61.58. The 52-week high is 592.50, whereas the 52-week low is 396.25. Now, the second company on the list is Emami Limited, and it's available currently at 1083.40. The target price here has been set at 1505, whereas the price when this stock was recommended was 1115.00. Now, Emami Limited is a fast-moving consumer goods company. The company is engaged in providing Ayurvedic medicinal products and cosmetic and toiletries. Now, if you were to look at the 1-year chart, you would see that the company underwent a spike towards the latter half of the year, but in the recent correction, all that gain has been lost. The market cap is 24,589.67 crores, which means that the company is a large cap one. The EPS is 14.45, which translates into a price to earnings ratio of 74.98, which is expensive. The industry PE here is also expensive, which means this company belongs to an industry where stocks generally trade at high valuations. The industry PE is 63.09. The book value is 75.45, which translates into a price to book ratio of 14.36. The dividend yield for the company is 0.65, whereas the promoter holding here is good at 72.74. The 52-week high for the company stands at 1365, whereas the 52-week low for the company is 990. Now, the third company on the list is Jindal Steel and Power Limited, which is available at 251.50, and the price when this stock was recommended was 266. The target price for this stock is 361. Now, Jindal Steel and Power Limited is an India-based steel producer. The company's segments include iron and steel, power and others. The other segment consists of aviation services and machinery divisions. The company's product portfolio consists of steel product mix, construction solutions and construction material and solutions. Now, the 1-year chart reveals that the company did nothing for the major part of the year, but of late there has been a huge spike. The market cap is 23,048.57 crores, which means that the company is a large cap one. The EPS and price to earnings ratio here is not applicable as the company is still a loss-making one. The book value is 237.51, which translates into a price to book ratio of 1.06. The industry PE is 19.12. The dividend yield here is 0, whereas the promoter holding here is average at 61.96. Now, the 52-week high for the company stands at 294.30, whereas the 52-week low for the company is 93. Now, friends, some of you may be worrying as to why Motilal Oswal went ahead and chose a loss-making stock. Now, probably the reason for that is steel cycle is on the cusp of an upturn, and if it turns, a lot of companies would exponentially benefit. All the steel stocks could generally do well provided they have a sound business. Now the next company on the list is Indraprastha Gas Limited, and it's available at 295.05. The stock was initially recommended at 290 and the target price here is 416. The symbol for the company is IGL. Now Indraprastha Gas Limited is an India-based city gas distribution company. The company's business consists of sale of natural gas. The company is focused on industrial and commercial business. The company supplies compressed natural gas to the transportation sector and piped natural gas to the domestic, industrial and commercial sectors in Delhi and the National Capital Region. Now the 1 year chart shows that the company was on a consistent uptrend for the major part of the year, but in the recent market fall, this stock has also corrected. The market cap of the company is 20,653.52 crores, which means that the company is a large cap. The EPS is 9.00, which translates into a price to earnings ratio of 32.78. The book value is 41.81, which translates into a price to book ratio of 7.06. The debt to equity is 0.1922, whereas the return on equity is 0.1914. The dividend yield is low at 0.58 and the promoter holding here is also not good at 45%. The 52-week high for the company is 1624, whereas the 52-week low for the company is 271. Now the next company on the list is RBL Bank Limited, and it's available at 476.45. The price when this stock was initially recommended was 484. The target price here is 680. The symbol for the company is RBL Bank, and RBL Bank Limited is a banking company engaged in providing a range of banking and financial services including commercial banking, retail banking, agricultural finance and financial inclusion, treasury operations and other banking related activities. The 1 year chart shows that this company has generally not done anything for the year and no major wealth has been created for the people who have held this stock. The market cap is 19,893.75 crores, which means that the company is a mid-cap one. The EPS is 14.06, translating into a price to earnings ratio of 33.89. Now this is a bit more expensive compared to the industry PE of 29.13. The book value is 104.85, which translates into a price to book ratio of 4.54. The debt to equity is 1.8402, whereas the return on equity is 0.1220. The dividend yield is low at 0.38 and the 52-week high is at 609.90. The 52-week low for the company is 413.65. Now the next company on the list is Exide Industries Limited, and here the current market price is 211.45. The target price here has been set at 268 and the price when this stock was recommended was 210. The symbol for this company is EXIDEIND. Now, Exide Industries Limited is a storage battery company. The company designs, manufactures, markets and sells a range of lead acid storage batteries. It operates through storage batteries and allied products, life insurance business and other segments. Now the 1 year chart for the company shows that this company has also not been a wealth creator and has largely closed the year at almost the same level at which it started it. The market cap is 17,973.25 crores, which means that the company is a mid-cap one. The EPS is 7.57, which translates into a price to earnings ratio of 27.93. Now this is largely in line with the industry PE of 28.08. The book value is 58.40, which translates into a price to book ratio of 3.6. The dividend yield for the company stands at 1.14, whereas the promoter holding here is a below average at 45.99. The 52-week high for the company stands at 250, whereas the 52-week low is 192.40. Now the next company on the list is Oberoi Realty Limited, which is available at 479 and the target price here has been set at 608. The price when this stock was initially recommended was 477. Now the symbol for this company is OBROIRLTY. Now Oberoi Realty Limited is engaged in construction and real estate activities and also hospitality. The company's segments include real estate and hospitality. The company is involved in the development of approximately 40 projects that aggregates over 9.18 million square feet of space. It handles residential, commercial, retail, social infrastructure and hospitality projects. Now this is a very high quality company, and as it is evident from the 1 year chart, this company has created quite some wealth for its shareholders. The market cap is 16,266.95 crores, which means the company is a mid-cap one. The EPS is 12.01, translating into a price to earnings ratio of 39.88. Now this is a bit cheaper compared to the industry PE of 42.10. The book value is 121.03, which translates into a price to book ratio of 3.96. The dividend yield is low at 0.42, whereas the promoter holding here is good at 72.49. The 52-week high for the company stands at 562.35, whereas the 52-week low is 317.60. Now the next company on the list is Repco Home Finance Limited, and it's available at 555.30. The target price for this company is 800, and the price when this stock was recommended by Motilal Oswal was 592. The symbol for this company is REPCO. Now Repco Home Finance Limited is an India-based housing finance company. The company provides a range of home loan products to individual borrowers in both the salaried and non-salaried segments to suit various requirements. The company has presence in two segments: individual home loans and loans against property. Now this company has also been a wealth destroyer, and no major appreciation has happened throughout the entire year. Market cap of the company is 3474.03 crores, which means that the company is a mid-cap one. The EPS is 31.98, which translates into a price to earnings ratio of 17.36. Now this is very much cheap compared to the industry PE of 28.39. The book value is 181.78, which translates into a price to book ratio of 3.05. The debt to equity is 5.7330, whereas the return on equity is 0.1730. The dividend yield for the company is low at 0.36, whereas the promoter holding here is below average at 37.13. The 52-week high for the company is 924, whereas the 52-week low for the company is 547.50. Now the penultimate company on the list is Multi Commodity Exchange of India Limited, which is currently available at 742.60. The price when this stock was recommended was 740, and if you were to look at the target price here, it has been set at 1100. The code for the company is MCX, and Multi Commodity Exchange of India Limited is engaged in facilitating trading and clearing and settlement of commodity derivatives. It operates as a commodity futures exchange. The one-year chart shows that the company has been on a consistent downtrend. The market cap of the company is 3787.14 crores, which means that the company is a mid-cap one. The EPS is 18.48, which translates into a price to earnings ratio of 40.18, which is more expensive compared to the industry PE of 29.32. The book value is 299.87, which translates into a price to book ratio of 2.48. The dividend yield for the company is 2.02, which is good, whereas the promoter holding is 0. The 52-week high for the company stands at 1258.85. 52-week low for the company is 671.75. Now the next company on the list is TeamLease Services Limited, which is available at 2159.95, and this stock was initially recommended at 2212. The target price here has been set at 2700. Now the symbol for this company is TEAMLEASE. Now TeamLease Services Limited is an India-based company engaged in employment activities. The company operates as a temporary staffing company and provides human resource services to various industries. Its segments include staffing operations, recruitment operations, and training operations. Now if you were to look at the one-year chart, you would see that it's a consistently uptrending chart, and a lot of wealth has been created here. The market cap of the company is 3692.82 crores, which means that the company is a mid-cap one. The EPS is 49.30, translating into a price to earnings ratio of 43.81, which is much cheaper compared to the industry PE of 66.97. The book value is 216.41, which translates into a price to book ratio of 9.98. The company does not currently pay out any dividends, and the promoter holding here is average or probably below average at 43.14. The 52-week high for the company is 2543.70, whereas the 52-week low is 840.05. Now friends, please don't treat these as stock recommendations. Please go ahead and do your own research. Also, if you are benefited by this content, please do share it, because it could help our channel grow, and this would in turn help us to bring more better content for you. So thanks for watching, and we will see you soon with another video.